Welcome back to 7-Minute Options. Right now we just got back. It's Tuesday morning, the day after Memorial Day. The markets were not open yesterday, and so I have a lot of positions that are 17 days to expiration. I like to roll my short positions right in the 15 to 20 day range, so this is perfect for rolling. So let's get to it. I sorted my portfolio here based on the days to expiration. So if I look at JPM, we talked about this 2 videos ago. It's an IRA condor. I don't want to roll it. So just to show you guys, the 166 it's right now, it has just breached my short put, right? My short call. So it's in a losing position, but it hasn't blown through the long strike yet, the long call strike, right? It hasn't blown through the 170 yet, which means I could roll it. So if I look at this, the 2 calls, I could roll this for a credit and pick up $14 by rolling it into July. I could also take the put side, which are, they're deep in the money now. I could pick up $71. Why don't I do that? The reason why I don't want to do that is because JPM has had a steady up move, and there's no reason why this can't continue moving up. And so I could move toward my $500 max loss. Remember, it's a $5 wide wings, so I could lose $500 minus the credit received. There's no reason why this can't continue moving up in the long term, right? I would add another 30 days to expiration on top of the 17, so I'd be, again, 47 days away. But the main reason why I don't want to roll it is because we got earnings coming up. So we got JPM earnings coming up before the July expiration, right? So if I kick it out to July 16th, I would have earnings here. So I am not going to roll it, because at that point, there's going to be very little time premium decay. There's very little extrinsic value that's going to come out before the earnings release. So I'm not going to get the same theta as I usually get, and I'm just carrying all that risk if it doesn't go in the way I want it to go. So my plan here is I just rolled this position a little bit to collect a little bit more credit. I'm going to hold this for another 5 or 6 days. If it pulls back in my favor, yay, I can sell it. If it doesn't, then I'm just going to mutter something under my breath and close it and just take the loss. So that's the plan there. That's JPM. Let's look at this Palantir. All right, what do we got for Palantir? We have 100 shares. We have a 17 put. We have a 24 call. It's fantastic. I love it. So we got the covered call and the short put. So let's see what happened to Palantir. It's moving sideways, which is fantastic. So let's roll actually both of these. All right, let's see what happens. Actually, Palantir has been moving up quite a little bit. The IV has been flat, so I'm not going to get a whole bunch, but let's see what I can get by rolling this out. What I'm going to do with this one is, you can see I can get $60 by rolling it out to June. Can I roll it out, to July, right? Adding another 30 days. Can I pick up a credit by rolling it up 25? I can. So I'm going to do that, right? I'm at 24 now. I can pick up a credit of $32, but I'm rolling it out to the 25 strike, which means the stock can go another $100 higher. $1 higher. I can collect another $100 on the upside, and I still take a credit for it. I will do that. So I am buying the 24 call in this cycle, and I'm opening the 25 call next cycle, picking up $31. Why not? So I'll get that going. And in the meantime, I'm going to go out and look at the 17 put. And I can pick up only 17 when I go in July. That's because there's only 6 deltas there. There's not a whole lot of movement that's expected. So I'm going to buy back the 17 put in June and see if I can roll this up. What if I can roll this up to the $15? The $19 put here. I can collect another $33. Not a terribly good premium. I think the IV is a little bit low on Palantir at the moment. No earnings coming up, so that's fine. Let's see where this goes. If these get filled, I will pick up another $62 or $63 in premium. Again, it's only going to cost me $2 to roll these out, right? One to roll out each one, and it's free to close the existing one. So $2 in transaction costs, $62, $3, $4 in premium. We'll see how much I collect by the time I close these out. All right, next one is RMO, Romeo Power. I sold the 15 put back in June. Where are we at now? It's just moving sideways. That is a That's okay. I mean, right now we're way down. We're not going to get a lot of premium here, I can tell you that. I already have 3 rolls on this. Yeah, let's try to get 10 bucks and roll it into July. At some point, I'm hoping this will start moving again. But again, collecting 10 bucks a month on this is not going to pay the bills. Generally speaking, I would want more, but there's just not a whole lot I can do at this point. I'm already underwater, so let's see where this goes. Not happy about it, but I mean, it's money. We just need a big up move in RMO in the next month or two, and we'll be all right. FUBO, all right. This is another 100 shares covered call, 17 put. FUBO has been moving up a little bit. And it's just about to breach our covered call. This is great. If you look here, yeah, it breached our covered call a while ago, and now it's pulled back. This is a perfect time to roll. Also, the IV is not too bad. I mean, it's not great. The IV rank on these are very low. It's just not a very volatile time, but it's not bad. We still have a 100% IV, which let's see what kind of money I can get for this one. And again, I want to roll this up just like I did with the Palantir one. So roll expirations. I can get 100 bucks if I kick it out to July. I can get 74 if I move up to the $26 strike, 45 to move to the 27 strike. You know what? I'm going to pick the $26 strike. Right now we are at 23. I'll pick up 73 bucks there. So let's do that. Oh, come on. There we go. And you can see these aren't filling, so I got to fiddle around with the prices a little bit. And the 17.5 put, you know what? Yeah, I mean, it was breached as recently as May 11th. It has gone up a little bit since then. Let's see what can I get if I just pull it. I'm not sure if I really want to roll that one up, but let's see what can I get if I roll the expiration. 58 bucks by kicking it out, 45 days. To July expiration. Yeah, let's do it. It's 59 bucks. If because there is no 17.5 put, so I got to roll it to the 18 put, which is perfect. I got 59 bucks. If I roll it up to the 19, I got 87. And that's a 20 delta. You know what? I'm going to keep it at the 18. I'm happy with the 60 there. That's close to that previous resistance that we saw. So the resistance we saw there is right around $17, $18. So that's fine. I rolled it off 50 cents. Okay, so that's what's going to be there. Again, none of these have filled yet, but Tesla, what do I have in Tesla? So 17 days, I got a short put spread here. That's fantastic. I should really close this out. I sold the 585.70 credit put spread, which is, again, that's a highly positive one, right? So I should be able to close this out, and it will also help my portfolio become more delta neutral because I could take off this 10 positive deltas there. But let's see where it is. I mean, right now the stock's at 624, so I should be making money on this. There you go. Palantir just filled. Fantastic. 585.70. So I collected $157 in credit, and I'm 43 underwater. It would cost me $200 right now to close it out. Why is that? That's a bit strange. But I do expect this to start making money soon. I really don't feel like I should take a loss on this because, I mean, right now Tesla can move down $44, and that would just hit my short strike there. So I realize I don't have a GTC order on this. I am going to put a GTC order on this. I got, let's see how much I got. I got 157 in credit. So I'm going to be able to close it for 50%. So you know what? I'm going to close it for 0.75. 75 bucks is what I want to pay, and that's good to cancel. And I'm going to check back on this. I'm not sure why this isn't closing. IV is quite low, so maybe Tesla just needs a couple of more days to go sideways. And I expect this intrinsic, look, I have $198 of extrinsic value in this position. I need that to come out quick in the next 17 days, and I believe it will. It's got 4 deltas, and as soon as it does, I'll be able to take the 10 positive deltas off my portfolio delta. So that's a position I want to close, but I don't want to lose money to close it because it's actually a good position. It's in the money, so I got to wait a few days on that one. What else we got? GDX. All right, that's perfect. GDX, $88 is what we got for this strangle. 44 is where we are now. So I could close it out today for a $44 gain. I have a $21 limit, so I'm pushing this for a very high profit margin, but 17 days left to go. I am going to cancel this order, and I'm going to see what I can do. If I roll the expiration, I can pick up another 74. So let's see, where's GDX? There you go. So there's the strangle, 34.41. It's a little bit on the high end. I mean, it has moved up and gone sideways. You know what? I am going to close this one out. I'm going to take my money and I'm going to reposition them. Yeah, I'm going to open a more delta neutral position. So right now, I want to recenter this a little bit. So I'm going to close this out, take my money, and then I can open up another one in a few days' time when it's about 40 days to expiration. So let me close this position at 45, and then I will open up another position and I'm going to center it. Right now it's not centered between the strikes. The next one I'm going to open is going to be centered, and I'm going to probably wait a few days. Maybe this IV is going to pick up a little bit. Who knows? Right now, if it's going sideways, it's going to move at some point. If the IV picks up, maybe in a few more days, I will get a little bit more premium for that one. So I'm going to close that one out. Twitter. All right. My Twitter put is at 60. I'm going to... Yeah, Twitter, IV rank is so low. I want to collect more money for this when I roll it out. IV is just flat at the bottom. Let's see. I got earnings coming up in July. Ugh. All right, that's yucky. So it's not going to move all that much. The IV is not going to collapse any further. Actually, the IV is probably going to start rising as we get closer to earnings. But that's 51 days away. Oh, it's July 22nd. It's after the July cycle. Perfect. Okay. So the earnings are not going to affect this one. So what do I get if I roll it out? I can collect $100 by rolling it out to July. I'm going to do that. I'm going to roll it out. Give me my $100. In this case, 95. Let's see if that gets filled. What else do I have? I got a few more here. I got X. This is the position. This is great for us. I mean, this is a great position. We opened it for 63. We are at 42 already. Fantastic. 20. There's no reason why I can't roll this out. I can pick up 38 by rolling it into July. Yeah, it's moved up a little bit. IV's collapsed a bit. Maybe it's better that I wait for a pullback. Do I want to close it? You know what? I'm going to close this out. I mean, why? I could roll it for 38, but like, maybe I'm just better off closing it out. What if I want to move it up a little bit? Do I want to move it to the 23 strike up here? That's where the support was previously. The previous support was 22, which is why it was easy to select that as the strike. Do I want to move it up to 23? I mean, it was just there 4 days ago. No, I think I'm just going to close this one out. I'm happy with this. See if I can close, pay $20 to close it out. GTC. And I think this might be the longest episode I've ever done. I didn't know I had so many positions to roll. So hopefully that's going to fill today for 20, or maybe tomorrow, but I'm hoping that's going to fill soon. Square, we talked about Square. That's an effing nightmare. And the rest, nothing to roll there. VIX is actually a hedge for me. I don't roll that. That is a debit. So I buy the 32 and I buy the 20 delta call once a month. It's just a hedge. So I lose money on it every month between, $70 or $100, whatever. This month it was 90. I lose that money every month. I let this run to expiration. The idea there is if there is a market crash once a year or whatever, a big correction, this pays off handsomely and helps cushion my portfolio. So it's purely on there as a hedge. I've done a lot of back testing, and that seems to work well for me, buying the 20 delta at 30 days to expiration every month on the VIX. All right, so that's a long episode, but thanks for hanging in there with me. What I'm going to do now is, you can see all these working orders here. I'm going to keep an eye on these, and I might need to adjust it up a penny, down a penny to get these to close out. But my goal is to close all these rolls out today, collect a whole bunch of premium, and let's see what happens over the next month. All right. Thanks very much.